Hi everyone, Jasper Son here. Thank you very much for watching. Today I will discuss how to determine your break-even point for your business. The break-even point for your business is very important. That is the amount of sales that you need to generate every month to make sure that you break even with your expenses. Now, very important, once you have determined your break-even point for your business, you actually need to add some surplus, some meat into your monthly net profit to make sure that you actually make a surplus. And part of your break-even point, the calculation, would also include your salary as a director of the company. So the additional surplus that you will add onto the break-even point will really just be the extra surplus that can build up into the company and to make sure that you're a very profitable business. So let's jump onto the calculations on the computer and let me guide you through the break-even point calculation. Right, so in front of me, I've got a whole list of various expenses that I've already compiled before the session. And part of that is the fixed cost of the normal salaries that you would pay, repairs and maintenance potential in the business, advertising, some car travel and delivery, courier expenses, accounting and other professional fees, rent paid for the office, telephone, insurance, some other expenses, and then also important to actually add in your principal amounts of the capital repayments that you do, potential installment sale agreements, business loans, revolving credits, all kinds of amounts that you need to repay on a monthly basis that will also obviously affect your potential profit or at least surplus in the company. And then lastly, also the owner's drawing, so the amount that you actually take from the business. And that will, at the end of the day, give you a total of expenses, and that's the amount before cost of sales that you need to generate to have a break even for the month with your sales. So if you're a services company, it's very easy. The amount of all the expenses are already, that is your break even point. Any amount above that you will generate as a service related company, you will have a profit. So that's a very easy exercise, and you can really, like I said in the beginning, add your surplus to that money, to that amount. So if your break-even point is 129,000 rand per month, then you add additional, let's call it 30,000 rand in a month, and you end up on a break-even point to make profit of 160,000 rand. So, but when you sell goods, so if you have a portion of sales and cost of sales, then the calculation is a bit more tricky because you need to look at your variable cost, the percentage. So this percentage would be the actual cost of all the various products. And if you're in the business of selling goods, you would need to go and look at your various components of cost of sales. So it would be cost of goods, inventory, raw materials, and potential direct labor. So direct labor they actually need to employ to produce a specific item. So in this case, the total cost percentage is 47% of the total cost of everything. And if you transfer that to the formula in this side, let me just go back to this side. So the cost of sales is 47. So your gross profit would be sales less cost of sales to get gross profit. And your gross profit would be 100% less 47%. So you will see on the I'll actually zoom into the calculation for you for the break-even sales. So your break-even sale calculation would be the 129,900 rand divided by 1 less the variable cost that we calculated on this side. So it actually divided by 53% in this case. And then you get to a break-even sales amount of 245,000 rand. Again, 245,000 rand would be really just break even, and you actually want to make a profit. So if you want to make a profit, that I'm sure you want to do, just add that amount, including that as well. So a good place to start would probably be about, for this company, 300,000 rand sales, to make sure that they've got a profit of 50,000 rand per month that will be more than their break-even sales. So that was a really simple exercise. I hope it helps. Thank you very much for watching. If you find any value from this video, please remember to subscribe to this YouTube channel, and also please share this with a fellow entrepreneur friend.